Hi everyone, and welcome! Today, we're diving into the exciting world of real estate investing. Remember, the information here is for educational purposes only. It's not a replacement for professional financial advice. Always consult with an expert before making any investment decisions. Real estate has always been a passion of mine. It's a powerful way to build wealth and create a more secure financial future. Whether you're just starting or looking to diversify your portfolio, real estate offers incredible opportunities. Let's get started on this exciting journey together. Imagine this. You're relaxing on a beach, sipping a cool drink, while money flows into your account. That's the power of passive income. Real estate can be your ticket to achieving this dream. But how does it work? Essentially, you invest in a property that generates income with minimal effort on your part. This could be rental income from residential or commercial properties, or dividends from real estate investment trusts, or REITs. However, remember that passive income doesn't mean no work. It requires careful planning, research, and management, but the rewards can be well worth the effort. Now let's explore the different avenues of real estate investing. Each type comes with its own set of advantages and considerations. Residential real estate. This includes single-family homes, townhouses, condos, and apartments. It's a popular choice for beginners due to its relative simplicity and potential for rental income. Commercial real estate. Think office buildings, retail spaces, warehouses, and hotels. Commercial properties often involve larger investments but can yield higher returns. Real estate investment trusts, or REITs, allow you to invest in real estate without owning physical property. They're traded on stock exchanges, making them a more liquid option. The best choice for you depends on your financial goals, risk tolerance, and investment timeline. Before you jump into the real estate market, it's crucial to have a solid plan in place. Think of it like building a house. You need a strong foundation to ensure success. Start by assessing your financial situation. Determine how much capital you can invest without jeopardizing your financial stability. Next, define your investment goals. Are you looking for short-term profits or long-term wealth building? Research different investment strategies, such as buy and hold, flipping, or wholesaling. Each strategy requires a different skill set and level of involvement. Choose one that aligns with your goals and resources. Section 5. Avoiding common pitfalls. Don't fall into these traps. Real estate investing can be a lucrative venture, but it's not without its challenges. Real estate investing isn't without its risks. Many investors, both new and experienced, can fall into common traps that can derail their financial goals. Being aware of common pitfalls can help you steer clear of costly mistakes. Overpaying for a property. This is one of the most frequent errors. Don't let emotions cloud your judgment. Conduct thorough research, compare prices, and understand the true value of the property. Negotiate wisely to avoid paying more than a property is worth. Ignoring market conditions. Another critical mistake. Real estate markets are cyclical. They go through ups and downs, and understanding these cycles is crucial. Failing to consider market trends and economic indicators can lead to poor investment decisions that might not pay off in the long run. Underestimating expenses. This is a trap that can catch even seasoned investors off guard. Don't just focus on the purchase price. Factor in closing costs, ongoing maintenance, and unexpected repairs. Property taxes, insurance, maintenance, and potential vacancies. These can add up quickly and impact your bottom line. Poor property management. Ineffective property management can eat into your profits and create unnecessary headaches. Managing a property requires time, effort, and expertise. Choose a reliable property manager who has a good track record and can handle the day-to-day operations efficiently. Or be prepared to handle tenant issues, repairs, and rent collection yourself. Being proactive and informed can help you avoid these common pitfalls and ensure a successful real estate investment journey. Section 6. Understanding the language of real estate. Cash flow, appreciation, and leverage. To navigate the world of real estate investing, it's essential to understand some key concepts. Cash flow. This is the lifeblood of your investment. It's the difference between your rental income and expenses. Positive cash flow means you're earning more than you're spending. Appreciation. Real estate tends to increase in value over time. Appreciation is the increase in your property's worth, which you can realize when you sell. Leverage. This is the use of borrowed money to finance your investment. Leverage can amplify your returns, but also magnifies your risk. Understanding these concepts will empower you to make informed investment decisions. Section 7. Location, location, location. Why it's the golden rule of real estate. You've probably heard it a million times, and for a good reason. Location is paramount in real estate. It's the cornerstone of any successful property investment. A prime location can dramatically impact your rental income potential, property value appreciation, and overall investment success. Consider factors like proximity to amenities, access to schools, parks, shopping centers, restaurants, and entertainment options attracts tenants and increases property value. Families often prioritize good schools and parks, while young professionals might look for vibrant nightlife and dining options. Neighborhood safety and crime rates. A safe and desirable neighborhood commands higher rents and appreciates faster. People want to feel secure in their homes, and a low crime rate is a significant selling point. Transportation and infrastructure. Convenient access to public transportation, highways, and airports is crucial for both residential and commercial properties. Easy commutes can make a property more attractive to potential buyers or renters. Future development plans. Research upcoming projects in the area. New infrastructure such as schools, hospitals, or shopping centers can significantly boost property values. New developments can positively impact property values. Staying informed about local development plans can give you a competitive edge in the real estate market. Section 8. The power of research. Knowing your market inside and out. Knowledge is power, especially in real estate investing. Thorough market research is essential before making any investment decisions. Start by analyzing market trends. Look at historical property values, rental rates, vacancy rates, and population growth. Identify areas with strong rental demand and potential for appreciation. Understand the local economy. Factors like job growth, industry diversity, and major employers can significantly impact the real estate market. Use online resources and connect with local real estate professionals to gather valuable insights. Don't be afraid to ask questions and seek expert advice. Section 9. The unsung hero: property management and your passive income. Property management can make or break your passive income dreams. It's the backbone of a successful rental business. While it's an additional expense, effective property management can save you time, money, and stress. Imagine not having to deal with late-night repair calls or tenant disputes. A good property manager handles tenant screening and placement. They ensure that only the most reliable tenants occupy your property. Finding reliable tenants is crucial for consistent rental income. They conduct background checks, verify employment, and ensure tenants have a good rental history. Rent collection and lease enforcement. This involves ensuring timely rent payments and enforcing lease agreements to avoid disputes. Property maintenance and repairs. Address maintenance issues promptly to keep your property in top condition. Regular inspections and timely repairs can prevent small issues from becoming costly problems. A proactive approach to maintenance not only preserves the value of your property, but also keeps tenants satisfied. Tenant communication and handling. Act as a liaison between you and your tenants, resolving issues and addressing concerns. Effective communication can prevent misunderstandings and foster a positive landlord-tenant relationship. Consider your time commitment and expertise before deciding whether to self-manage or hire a professional. Weigh the pros and cons carefully to make the best decision for your investment. Section 10. Ready to take the plunge? More resources to guide you. Congratulations! You've gained valuable insights into the world of real estate investing for passive income. Remember, this is just the beginning. Continue your education by exploring reputable resources. Books dive deeper into specific investment strategies and learn from experienced investors. Online courses gain practical knowledge and skills through online platforms dedicated to real estate education. Networking events. Connect with other investors, real estate professionals, and mentors to learn from their experiences. Section 11. Join the journey. Like, subscribe, and let's build wealth together. Thank you for joining me on this exciting journey into real estate investing. I hope you found this information valuable. Don't forget to like this video and subscribe to my channel for more tips, strategies, and insights on building wealth through real estate. Let's create a brighter financial future together.